And it's actually even further along than that. We've got an incredible amount of progress to report on that project. So can't wait to dive in.
Yeah, we were just there at Stonehaven Apartments this weekend with our children. The project is much further even than you see in this picture. It has a full roof, windows. It's all buttoned up. It has heaters, job site heaters, not the HVAC system yet. But we were able to walk the entire building with our children this weekend, despite the fact that it's only 0 degrees out in Minnesota. It was a nice, probably
Mhm.
60, 65 degrees in the building, and it's neat to see that building come together.
And our usual disclaimer that everything we are presenting here is for informational purposes only. This is not investment advice. We're not attorneys or CFPs or accountants or anything like that. You should always consult your professional advisors before making any investment decisions in the future.
Yeah. And anytime we do our updates, they're a mix of backward looking information, which comes, from the performance of the portfolio. And then we do at times make forward looking statements of our predictions of the behavior of the portfolio based on that past performance. But those forward looking statements are never guaranteed. They're just our best estimation of what might happen in the future.
And a little bit about us. If this is your first webinar you're checking out, my name is Nick. This is my wife, Elaine, and together we are husband and wife and owners and operators of Black Swan Real Estate. It's a real estate private equity firm with over a third of $1 billion in assets under management. Seems kind of crazy to say that number out loud. Over 70 million in capital raise. I think we might be up to 80 million now after closing our most recent fund. We've got a real estate sales team that sells a little bit of real estate, over $180 million in lifetime real estate sales. We're in Gary Keller's personal mastermind, and we do a little bit of ground up construction as well, with over 50 million ground up construction to date, like we were just talking about.
Yeah.
So that's just a little about us and our background, and why some of the thoughts that we share with you might have a little bit of authority. You might want to take a couple notes, and why we have experienced so much success in our time in this industry, especially at a time when some other operators are struggling with some market conditions. But we'll dig into that here soon.
Yeah. Let's talk a little bit about distributions. So we're really proud of the distributions we were able to put out in 2024 and what we have planned for 2025. At Black Swan Real Estate, we have never had capital loss. We have never had a capital call. We've never really even gotten to a place where we're low on liquidity in any of our entities or our funds. A big part of that is our conservative underwriting. Another huge part of that is our approach to debt. So through the 2020, 2021, 2022, when interest rates were at those historic lows, we chose to get all fixed rate debt. So that's allowed us to sleep really well at night as interest rates have escalated so aggressively over the last couple of years. And that's really harmed a lot of operators because their debt service, went up so much over the last couple of years. Fund One, we did monthly distributions throughout 24. We're going to continue those in 25. We're at a little over 16% return of capital for Fund One. Fund Two, we've returned 2% so far, and we're starting monthly distributions for 2025. And then Fund Three and Fund Four, those are our newest funds. Those opened and closed inside of 2024. So they're still brand new funds. We anticipate that distributions will start for Fund Three and Fund Four in early 2026. We're targeting Q1 of 2026 for our distributions to start. You should be receiving all of your distributions directly ACH deposited into your bank account. You can set that up inside of the Invest Next portal. Go ahead and email Rachel at Black Swan Team, if you have any questions about that, if you need to change your bank account, those sorts of things. If you have invested out of like a 401k or an IRA, most often those are paper checks that are sent. But if you invested out of just like a general bank account, you should be able to get your distributions direct deposited into your account. So excited about distributions and the consistency of distributions that we'll do throughout 25. Our PPMs call for quarterly distributions, but we have found that people like monthly distributions. And
Mhm.
so we're happy to process our distributions once per month.
And the question on everyone's mind this time of year is always K1s. We have been very fortunate to be very prompt in our K1 distributions here. So we expect K1s for funds 1 through 4 and our new Secure Freedom Fund to be distributed prior to March 15. I feel really good about our tax preparation game right this second. Please do make sure that you've got all your contact information on file and up to date with us in the InvestNext portal so you can get those promptly. You'll get those 2 different ways. One is through that InvestNext portal, and the other is with the Safe Send Returns tool that goes straight to your email inbox. So we'll send them by carrier pigeon, smoke signal, whatever we can do to get your K1s to you. We know how important that is to you. But hopefully, at least one, if not both of these ways, we'll get those K1s for you promptly. Just do your best to make sure that we have all your contact information up to date.
Yep. And do note that the document that comes to you from SafeSend returns directly into your email, and what is uploaded to InvestNext, it's all the same tax form, so you don't need to go to both locations. We use SafeSend returns so that we can get them out to you a few days sooner, because then we have to manually upload those into InvestNext. So it adds another couple of days to the distribution timeline. You can think of SafeSend as like getting it quickly into your email inbox, the fastest way to access it. And then InvestNext is like your safety deposit box where you'll have that file in there for years and years to come if you ever need to pull that back up for your records.
And coming up here in just a week, we've got our next, kind of exciting webinar that we're doing on commercial lending. This is the most common question we get. I have an email in my inbox from one of Elaine's coaching students that I need to reply to. And for that particular individual, I know we've saved them, tens of thousands of dollars just with a few minutes of our time, kind of coaching them on different terms that they can kind of negotiate with on the bank. Like, hey, I don't think the bank's going to give you this, but maybe they'll give you this. The deal plus the debt is what creates all the magic in real estate. Real estate's not a very sexy asset class if you just own it with cash. It's the debt that makes it so absolutely incredibly powerful from a returns perspective. And mastering commercial lending is one of the biggest like skill gaps that we see for most real estate investors. They maybe do a few single family deals on their own with like a conventional mortgage broker that they got a loan from on their personal home, and then making that leap to commercial lending. That's just it's a completely different universe. It's really opposite of conventional lending in a lot of ways. They don't make that leap, and they're like, oh well, I've got a few rental properties, and I can't go buy a small apartment building, or I can't go buy my fifth or 10th property. So we see this as one of the biggest gaps out there, and we would love to just pour into y'all and share some of our experience about kind of pro tips, A to Z on commercial lending in real estate.
Yeah, and the awesome thing about commercial lending is you can get a commercial loan on a single family home. You can get a commercial loan on a tens of millions of dollar building, right? It's all the same skill set. So once you have that skill set, you can essentially use it for really any size asset across all the different real estate sub asset classes like apartment buildings, industrial, office, all of that. You can sign up at blackswanteam.com/lending. Rachel also has that link there in the Zoom chat, and we'll put that in the replay email as well. So blackswanteam.com/lending. That'll be a live masterclass. The replay will go out. We'll have a workbook, all sorts of things. You can come in knowing nothing about commercial lending and leave with a really solid plan in place to help you scale your portfolio. And then what we're most excited about is this is our like official announcement of Black Swan Real Estate Real Life. This is our 4th annual in-person conference here in Rochester, Minnesota. It is a joy to put this conference on each year. People rave about it. It is exactly what the title is, Real Estate Real Life. Nick and I have always been believers that the point of real estate is not to just amass a portfolio or be like Scrooge and have a bunch of dollars in the bank. The point of real estate is to build an amazing real life, to have passive income, to have joy in the value that you're creating for the community, for the people that are living in those buildings, to think about the goals that you want, whether it's cutting back at work or taking additional vacations or putting a kid through college or whatever it is, and using real estate to support your real life. We are hosting it here in Rochester, September 11th through the 14th. There is an optional VIP day on September 15th. So ticket sales are now open. We've lined up some amazing speakers. We'll be announcing those over the coming days. Really excited about what we've put together this year. On Thursday, we have a really nice networking reception. You get to know the people at the conference, build those relationships. Friday and Saturday, we'll have content around mindset, goal setting, manifestation, real estate, commercial lending, short-term rentals, long-term rentals, all the things, really packing in all the information about both real estate and mindset in real life. And then on Sunday, we do property tours, and people really like those. The feedback we always get on the property tours for people that haven't come to Real Estate Real Life is like, well, I wasn't quite sure what to expect, or I've never done like a bus tour of apartment buildings, but they really love it. If someone is an investor of ours, they love seeing where their dollars are going and getting to touch and see and be inside of the buildings that they own. And if you're working on building an active portfolio, no matter the size, people love to get that really in-depth behind the scenes look at our operations. And then on Monday, September 15th, we have an optional VIP day. So you can register at rerl2025.com. We do have a promo code for $500 off registration. That's the biggest discount that we're offering to get a bang with our sales here. That will be valid for the next 48 hours. So a whole $500 off of registration. We have a virtual option as well. We offered that for the first time last year. People loved that. If you come in person, you get the recordings afterwards as well. So be sure to join, whether you plan to come here and join us in person in Rochester or you'd like to join us virtually, rerl2025.com. Use the code 2024 to save $500 off of your registration, and that code will be active for the next 48 hours. I'm so excited about that. I've spent most of my day yesterday coordinating with our speakers and getting the schedule ready and working with Rachel and other members of our team on the agenda and everything. So it's just like very top of mind for me. And I'm so excited about Real Estate Real Life this year. And we look forward to having you there, whether it's in person or virtually.
Awesome. So we're leading off with a bang. We're trying to give you some of the most critical information here at the top, and then we'll start digging into details for individual apartment buildings. So here's some hard numbers to share with y'all. I'm really proud of these numbers. I'm really proud of our strategic goals for 2025. As our portfolio matures, as Elaine was just talking about, we need to shift gears as a company, going from, we did 275 renovations 2 years ago. In 2024, we only did 75 renovations here in Rochester, 75 in Tacoma. So we're dialing that back. We're gonna have even fewer renovations, most likely in 2025. And it's all about yield. It's all about driving efficiency, optimization, cost savings to our portfolio as a whole. And so we've got some pretty aggressive, but I think achievable goals. These are not goals that we just kind of pulled out of the air. These are very specifically calibrated goals. So right now, our average profitability on one of our STR units is about $200 per unit per month. And that's kind of net after all the additional costs are considered, because there's a lot of additional costs associated with running STRs, as we've discovered, as we've matured that line of business, going from one person to many people running that line of business. We want to double that profitability from $200 per unit per month net to $400 per unit per month. We have some units that are as much as $800 per unit per month profitable, and then we have some that are a break even at best. So I'm confident that we can hit that target, though it's a bold target to double your profitability in your second year business. Right now, we're spending about $188 per unit per month on maintenance and renovations. I want to cut this number by at least 20% in the coming year. I think that's going to be possible as things mature. You end up spending more money actually on capital expenditure than you on maintenance, on turnover, on replacing flooring and those sorts of things. So that would be like a high number for maintenance, but a lot of people, they move a lot of expenses below the line into CapEx. We're real with ourselves. We look at what's the actual cost to keep this unit alive, physically speaking. For us, it's about $188 per unit per month, which I think is a pretty darn good number, kind of industry wide. We want to squeeze that down another 20%. We want to reduce our average per unit per month utility cost by 20%. We've reduced it by about 20% in the last year. I'm confident we can get another 20%. I know that sounds a little crazy. I was tweaking our smart thermostats, late at night last night when it was below 0 temperatures. I know we can get another 20% out of this.
Nick is fanatical about utility costs, which really warms my heart, because I feel like I'm the one that's always like, don't put that in the landfill, put that on, a buy nothing website, give that to Habitat for Humanity, all the things. So I kind of take care of the physical things that we create during renovations. And then Nick's the one that the moment we visit any of our apartment buildings, he's instantly at the panel, at all the thermostats, checking the breakers, checking everything, reducing all sorts of things. So
okay, so our director of growth was on call last night for emergency on call. We had a water leak, and so our main on-call person responded, and then they called for backup because we needed to do water extraction, all kinds of things. So our director of growth messages me last night. It's 10:15 last night, and he says, "Hey Nick, I noticed that our lobby thermostat is at 70 degrees, and we don't need to keep our lobby at 70 degrees when it's 10 o'clock at night. There's no one there. There's floor to ceiling glass. It's very wasteful." So I reply at 10:20, and I said, "Okay, I've reduced it back to 66 degrees, changed it so it should, the schedule should be working." But I love, this is such a moment of victory that our team is so trained that they are literally in the middle of the night, in the middle of an emergency, and they're like, "Oh no, that thermostat is 4 degrees too expensive." The difference between 70 degrees and 66 degrees on that thermostat,
when it's -10,
yeah,
is huge.
Yeah. It's huge. It's the thermostat, it's the furnace running continuously versus running 25% of the time in that lobby. So that gives you some idea of the amount of intention and intensity we put into that. We want to reduce our facilities cost by 20%. That's only $20 per unit per month, but I think we can get that cost lower. And then this is kind of bold. We want to reduce our legal and accounting costs by 50% year over year, which I know is a pretty steep cost reduction. But I think there's a lot of overheads we can shave here in various places. We just hired a new accountant yesterday. They just signed the offer letter like a few minutes ago, and that's we keep bringing more of those administrative legal accounting functions in house. And then here's the boldest one of all. We want to increase our portfolio wide cash flow by 600% in the next 12 months. Now that's not a typo. We want to increase our portfolio wide cash flow 6x. We want it to be 6 times higher than it is today, and that's not a number that we kind of pulled out of the air. That's a very careful calibration of if we really put the pedal to the metal on all these goals and we maintain same or better rent growth to what we've maintained in the past year, which our rent growth is about 10 times higher than the industry average at this time. So if we can maintain that 10 times the industry average, I think we can increase our cash flow by sixfold, by 600% in the next 12 months. This is what we're really focused on. And then finally, there lease all Stonehaven apartment units by September 1st. So these are some bold goals. We just had an all hands retreat, took our whole company away for an entire day and an entire night at our personal home. And I mean, this was the headline, like drilling down into how we're going to achieve this, and then we're going to get everyone together here in a few weeks again and literally go through like spreadsheets with our maintenance guys of like, here's how when you respond to a ticket, it impacts this in such a huge way. So these are our big bold goals, and we're headlining it here with this presentation. Hold us accountable to this. A year from now, we're going to check in, and
it's a little scary for us
it is
to put these out right in a slide and a recording. Like we're going to be here again in January of 2026,
and these numbers are already really good. So it's not like there's just like all this fat laying around to trim, but I know we can. I'm certain we can.
So let's accomplish that together, you guys. We're excited about that. Let's talk about loan maturities through 2024 and 2025. This is really the story of commercial real estate across the entire country. As you know, interest rates went up more aggressively than really ever before in the history of the Federal Reserve because of the staggering inflation that came in the post-COVID world. Rates, were cut in the last couple of Fed meetings, but there's still a lot of interest rate risk out there. The jobs report has been strong. People are uncertain how the Trump administration, what might happen there as a result of their decisions in terms of inflation and how that relates to interest rates. So the last couple of years have been really challenging for lending in the commercial real estate space. 2024 was tough, and kind of the theme in the industry was like survive until 25, and it looks like 25 is going to be just as hard. There's $1 trillion of loan maturities across the entire commercial real estate industry coming due in 2025.
That's not a typo. That's trillion with a T.
Yeah, so that can be really fatal because if you're refinancing that loan at a much higher interest rate, you may not be able to qualify for that loan. You may not be able to make the debt service. If potentially the value of that building has gone down, the bank may be unwilling to lend as much. So there's just lots of different variables that kind of all come to a head that can really be fatal for many in the industry. That's why there's capital calls. That's why there's loss of capital. And because we've had all fixed rate debt over the last many years, we've had fixed rate debt going all the way back to when we started investing in 2011. That was just always a value of ours together. Nick kind of calls me like the chief risk officer. And that was a variable that I was averse to, was like, I like to know what our mortgage payments are going to be in our personal home and our real estate investments. And so we've always had fixed rate debt, and that decision has served us very, very well over the last couple of years. The financing risk that we had through 2024, there's a typo on the slide there. It says we had a phenomenal outcome with financing on RDS in 2025. That should be 2024. We refinanced that on October 30th of 2024. And, really favor was on our side. That was a nadir in the 5-year treasury. And so we were, phenomenally successful with refinancing that in a cash neutral refinance. We didn't have to bring any cash to the table and got really good terms on a 3-year term for that. We had a full cash out refi at Dakota Townhomes in 2024. And then really the story of this slide is across our entire portfolio, right? About $375 million in real estate assets. We only have $1 million of loan maturities in 2025. It's on a small 12-unit townhome community. We could just write a check and pay it off if we had to. We're going to refinance it, but there's essentially no risk in our portfolio in 2025 as a result of lending. So we're really excited about that. We do have to get our final phase of construction lending at Tanara. That's one of the large assets in Fund 2. But overall, we're looking ahead at 2025 at a time when our peers in the industry are very, very worried about their portfolios. And we know that we will have another year of very good sleep at night, not having to worry about our lending. So super excited about that and wanted to lead with that at the top because a lot of people are reaching out saying, hey, I'm having a capital call with, XYZ investment, like what's happening over there? Should I expect a capital call from Black Swan? We've never had a capital call. We've never had capital loss. We are actively doing distributions out. And most of that comes to operations and our excellence in operations, which Nick just talked about, improving them even more in 2025. And then the second piece of that is our really conservative lending. So super excited about that. Let's talk about our Q4 and really year-end 2024 updates.
Yeah, so just an incredible year of growth and maturity for our property management company. Got a few of our fun group photos from some of the events that we've got there. We won Best of the Best again. This is a big deal here in the Rochester market. It's you put it on your trucks or your storefront glass or whatever. This is people in the town of Rochester voting with the local newspaper, the Post Bulletin, on their favorite property management company, apartment community. We won Best of the Best Property Management Company, Best of the Best Apartment Community at RDS. We were a runner-up for Best Real Estate Agent with Melissa Adams-Well, who leads our real estate sales team here in Rochester. Keller Williams, the brokerage where we hang our license, won the Best of the Best for real estate brokerage, and we also got Best Place to Work, medium large, and we were a nominee or
we were a runner-up.
Right. We're not going to beat Mayo Clinic on that one. We got big enough that we're now competing with Mayo. So if we beat Mayo, we have a problem. That's not a good thing for our company if we do. We hosted Real Estate Real Life 2024. So if you were there, it was. So my favorite headline for this event was that two different unrelated people, as a result of this event, decided to pick up roots and move to Rochester to work for Black Swan.
That's pretty cool.
We hope that this is a life-changing event. Like, we take you through some pretty challenging exercises, and we really like push you to like make big changes in your life to make your life better. And a couple people decided that they wanted to come work for us full time, get this Kool-Aid full time, and they both had phenomenal success with our organization. But I've never heard of a conference you go to where you end up working for the organization or something to get done.
I'm surprised you didn't say that your favorite part of Real Estate Real Life was our surprise groundbreaking of Stonehaven Apartments. That's the picture there where we have the champagne and the hard hats and everything.
Well, our new people are just crushing it. Hey, Rachel, can you put rdsrochester.com into chat? So Sophie, one of the people who joined our company, we just unveiled our new RDS website yesterday. So this is her work that you can see showcased. It looks absolutely phenomenal. Just phenomenal work. Your website is your most important piece of marketing collateral. Could not be more pleased with. So I like building a new apartment building, and our Move That Bus surprise groundbreaking of Stonehaven Apartments. But I just love our team so much. So I'm gonna go with that.
Absolutely. Let's talk about our rent growth. So we've shared stats for our rent growth in all of our quarterly updates going back for years. 2024 was a really solid year. 2022, 2021, those were solid years for, really the whole industry across the country because of stimulus and other sorts of things, just kind of raised rents across the country. But 2023 and 2024 across the country were much more muted years. And we've been really happy that we've had, staggering rent growth across our portfolio. Some of that comes from renovating the units, right? The whole point of renovating those units is to get a higher rent premium afterwards. And then a lot of it is just our operations, as Nick said, like really focusing on marketing, the leasing experience. Sometimes we can get people from that first phone call or email all the way through a signed lease before the other property management companies in town even call them back, right? That speed to lead, that customer service experience, our renewal experience by giving people a great living experience, taking care of their maintenance needs, their customer service needs, they're eager to renew. So kind of
we just call them. We just call them and say, hey, how are you doing on a scale of 1 to 10? How happy are you with us? If we didn't earn a 10, what can we do to earn a 10? I don't know another property management company that exists that just calls their tenants from time to time, at least a couple of times a year, and just ask how we're doing. And that's literally all it takes to get a lot of the outcomes that we get, is just to care.
Yeah. So you can see here for Fund 1, Rochester Homes Fund 2, or Rochester Fund 2, Fund 3, and then our Tacoma Fund 2. You can see the growth there from the acquisition date for each of those assets to December 2024. Really staggering rent growth across the portfolio. So really excited about that and looking forward to another year of continued rent growth in 2025. some of our achievements for 2024 in construction. We finished Stonehaven Townhomes after 4 years of effort. That was certainly a victory moment for Nick and I to, stand in that what once was a field where we used to be able to, turn in a full circle and see grass in all directions. And now we can see townhomes in all directions. And then we had our groundbreaking of Stonehaven Apartments. So we did that during Real Estate Real Life 2024. That was our surprise for that event. We took people, did the bus tour of Stonehaven townhomes, and then said, okay, settle in. It's going to be 8 or 10 minutes until our next asset. And then we actually got off the bus like 15 seconds later and said, surprise. And we had champagne and it was a ton of fun. So really excited about Stonehaven Apartments. And then we completed the main floor units at Residence at Discovery Square. That was a really complex, exhaustive, what's called an adaptive reuse. That building, that first floor was built for commercial space. Well, we all know commercial space hasn't done too well in the post-COVID world. And so we got approval from the city to convert those to units, completed that in spring of 2024, immediately converted them to short-term rentals so that we could start having revenue right away. And that was a fun project and it's done. Super excited to be done.
That's right. Yeah.
A couple of members of our team got their general contractor license. So as we've scaled and we've had more complex renovations and this ground up construction and some of the goals that we have for the future, it was really obvious that we needed to have a general contractor on staff. So both Stephanie, our director of operations, and Tyler, our director of construction and maintenance, both got their general contractor license in 2024. So if you see them around or if you're in communication with them on email or anything, give them big congratulations. This allows us to pull permits. It allows us to have more streamlined conversations with the city, with city planning and zoning. Just so excited about the maturity that this brings to the company to have a not just one, but two general contractors on staff.
We continue to expand our lawn and snow services. So we now have a lot more lawns to mow as a result of different acquisitions, Boulder Ridge, Georgetown, Northern Place Apartments. So we have more trucks, more trailers, more tractors, and more people to run all that equipment. We're on track to cut our lawn and snow expense at Georgetown, for example, our most recent acquisition, in half year over year. So love seeing the financial outcomes of this, the quality outcomes of this, and love seeing our guys riding around on their mowers.
Yeah.
We bought a bunch of stuff. This was, by dollar volume totals, I believe, our most successful year in the history of the company. And this is a year when, frankly, there's not a lot of groups making acquisitions. It's a tough year out there for a lot of groups. They're kind of struggling with their existing portfolio. So the idea of buying new stuff is just not, it's not on their radar. And the few groups that are buying, we are getting the best deals we've ever gotten. Just the basis we're buying things at is absolutely staggering. We bought Uptown Apartments, Baycrest, and Bayswater. I know those are confusingly similar names, but that's just how it lucked out. Completely unrelated buildings there in Tacoma, Baycrest, and Bayswater. But we bought all three of those buildings in Fund 3. Georgetown townhomes is split between Fund 3 and Fund 4, just like we split RDS between Fund 1 and Fund 2. We bought Northern Place Apartments in the Secure Freedom Fund, so we kind of quietly launched that. We haven't yet advertised that on social media or anything like that. There's, it's up on our website and everything, but we put our first asset into that fund. We bought Viking House. That was a pretty interestingly located triplex property. That was our kind of first big STR purchase. We bought that in Fund 3. Bought some more Riverview units. I think half a dozen or seven units for Riverview. We've just got half a dozen remaining right now. And then we're under contract on Boulder Ridge. Everything's submitted to HUD. We're hopefully going to get approval from them any day now. We'll be closing in the next couple of weeks. So we're very excited to get closed on Boulder Ridge in Fund 3 and Fund 4. So it was an incredibly busy year from an acquisitions perspective. And the crazy thing was, it feels like it was actually kind of a peaceful year.
I would agree.
Such a thing.
Yeah, that is exactly what I was going to say. Because we've brought so much in-house over the last several years, we were able to send our teams to do these renovations. We're able to send our people to do like the deep cleans of these buildings that we want, like all of those things from vertical integration, because our property management staff has done so many acquisitions and all of the administrative work that goes with that acquisition. This was the largest by volume year of acquisitions in the history of the company. It was right around 75 million. And yet it was, I wouldn't say it was easy, but it was nice and steady.
Yeah.
There was never a feeling of, overwhelm or anything like that.
Yep.
So really excited about that and looking forward to seeing what 2025 brings in terms of acquisitions.
We talked about the $1 trillion wall of maturities coming, and what a big challenge that is for our industry. We had just an incredibly successful year on the financing front in 2024. We got a full cash out refi on Dakota, formerly Douglas Trail Townhomes. I guess I don't know of a single other group that achieved a full cash out refi this year. I've not heard of such an achievement. I mean, it could have been an even more successful, cash out refi if rates, had not run up so much. But despite all those headwinds, we were just able to add so much value to that community that we still got an incredible cash out refinance on that particular property. We got our first Fannie Mae loan at Georgetown, and this is a tough time to get a Fannie Mae loan. They've really ramped up their underwriting criteria because a lot of the headwinds in the industry, and we're very excited to now be on their kind of frequent flyer list. That's going to help us a lot with future acquisitions and potential refinances. We're about to get our first HUD loan here at Boulder Ridge, and again, getting your first one is very difficult. We're 7 or 8 months in now, which I was told to expect 9 months to close on your first HUD loan. It gets easier as you do more of them, but it's a process. It's a very involved process, and so we're unbelievably excited to have those under our belt. That's going to open up lots of future financing opportunities for us. And then, of course, the banner success really was the successful refinance at RDS. Just that could have been a situation where had we been less successful, we'd need to bring $1 million or millions of dollars to close on new financing there. Instead, the appraisal revealed that we created $6 million of value on that asset in 18 months, and the bank was very excited to give us a cash neutral refinance.
Let's talk about our successes with partnering with investors. Many of you are on this call, so thank you for investing with us throughout the years. 2024 was a great year for capital raising. We launched and filled Fund 3, a $15 million fund. We did that in February. We launched and filled Fund 4, another $15 million fund. We launched our Secure Freedom Fund. As Nick said, we did just a really soft launch for that. We just raised like a little over $2 million to acquire Northern Place Apartments. So stay tuned for that. We will, next time we have our next acquisition, we will officially launch the Secure Freedom Fund. We're really excited about it. It's a fixed return offering, gives people a lot of certainty and security during the volatility in the real estate market right now. So people are really excited about that. So stay tuned for that.
I guess people could jump on the wait list if they want to. Rachel, if you want to throw a link to securefreedomfund.com on there, anyone is welcome to jump on the wait list or chat with us about that opportunity. There's not an opportunity right this second. It's not open to funding right now, but it will be at some point in the future again.
Yep. And we are now at over 400 passive investors. So again, thank you for investing alongside us, for placing your trust in us. We think about all of our passive investors. We look at the roster of all of your names, very often as we're doing distributions, preparing the tax returns, and just think about you guys and whatever you want to call it. Pray for you guys, send good vibes, send good wishes, but just really take each of those relationships very personally. And we understand the trust that you've placed in Nick and us and in our team. And it just means so much to us. So thank you for another amazing year of partnering with our investors.
So here's just a few banner stats. If you want to know how a multifamily group is doing, an individual apartment building, a private equity firm, anything in between, just ask them what's their economic vacancy right now. That'll tell you really everything that you need to know. An industry benchmark would be 5%. We're doing a lot of kind of deep value add renovations, turning over a ton of units. Not including rehab down units that are actively being renovated and not leasable. Our current economic vacancy in Rochester is 2.1%. We're under 5% in Tacoma, and we're at 2.1% in Rochester. That is just a completely insane number. Really getting under 2%, you start to get into just logistical impossibilities because you need so many days to turn over a unit once a year, right? Or if someone is moving out, you may not be able to get someone who can move in, the day after they move out. You need a little bit of buffer time there, and maybe there's 30 days of vacancy or 15 days of vacancy or something like that. So this is just an absolutely bonkers number with the amount of growth that we've had this year, inheriting vacancies at Georgetown on that acquisition, with the units that we've added at RDS, and most critically with all the units we've constructed. We built 55 units at Stonehaven Townhomes today. So despite all those things, we're squeezed all the way down to 2.1%. I think it could get lower. I'm challenging my team. I want at least 1 week sometime between March 1st when turnover starts to ramp up again, where we get under 1% vacancy. I don't know if that's actually possible or not, but that's the goal. In conjunction with that crazy number, we had 6.6% rent growth on renewals only. So we're not talking about big rent pushes as a result of big rehabs that we did. just on our renewals alone, this is a time when the vast majority of people in our industry are just offering static renewals, like no change in rental rate. Which, if you go listen to other webinars, they're kind of on pins and needles about that because their insurance costs have gone up. Ours have gone down, by the way, in the last year as a result of really aggressive work on that front. But insurance costs are up, labor costs are up. Every expense category is up, but rents have stayed the same, and that's lethal financially. So
Mhm.
unbelievably proud of the 51% renewal rate with 6.6% rent growth, over 8% rent growth portfolio wide. Again, at a time when nationally in the last 12 months rents have been basically 0% rent growth, less than 1%. And then just a couple random stats to throw in there to recognize our other teams. Just in the Rochester team, we responded to 14,000 leasing leads, just a staggering amount of phone calls, emails, text messages. And then just in Rochester alone, we had 6,000 maintenance tickets. Those are just a couple numbers that I happen to have handy. Love our team, all their incredible work, and we've just had incredible outcomes here.
And while Tyler had spare time leading our maintenance team through 6,000 maintenance tickets, he got his general contractor's license.
Yep.
We have a good team. We're so appreciative of them. Let's talk a little bit about Rochester employment. So this is the city of Rochester as a whole. 7,000 jobs were added in the last 12 months in Rochester, and keep in mind that's against a population of about 150,000. Right, Rochester, for all intents and purposes, is a relatively small town in the Midwest. It kind of acts bigger than it is because of the Mayo Clinic and all of the tourism that we get as a result of the Mayo Clinic. But to have 7,000 jobs added against a population of 150,000 is really staggering. As you can imagine, job growth is the number one driver for housing demand. Where are those people going to live? And as there's job growth and income growth, and that leads to rental increases, to property value increases, lower vacancy in the future. And all of this is just kind of the tip of the iceberg of everything that's coming from the Destination Medical Center initiative that's been happening over the last decade, the $5 billion expansion of Mayo Clinic. We've talked about that in some of our other webinars. We're not specifically going to address that today, just in the interest of time. But you can just Google Mayo Clinic expansion, a $5 billion initiative over the next many years. That's staggering. The Amazon HQ2, that was a $2.5 billion expansion, and it never really came to fruition. So to have a $5 billion investment in a community of 150,000, everything that we're seeing in Rochester in terms of the economic vitality here is, really just the tip of the iceberg of what we're going to see over the coming years.
And that's becoming real. Like we're working on easements right now because Mayo needs to dig like a 200-foot deep hole right next to one of our buildings to put in, their tunnel system and stuff like that. So it is quite real. There are people with jackhammers and cranes and stuff, and it's very neat to see it all starting to like really happen. And our greatest achievement of 2024 by far is baby Elijah was born. It's great to have all these apartment buildings, and we love doing everything we can to help all of our investors achieve financial freedom for their families. And we love doing everything at scale. So baby number 5, and this is this is what it's all about for us. This is if you have kids, you probably get it. Like this is just what makes life worth living, or what's life is all about. So could not be happier with baby Elijah. Elaine has been just a warrior, continuing to run her coaching program and everything. We have an army of help to make all that happen. We appreciate all those people. And I love having a baby in the house. It's always just a good vibe to have a baby in the house.
He's 13 weeks old today. He'll turn 13 weeks old at 7:01 p.m. He's right across the hall with Allison.
Maybe we'll get him a cameo at the end or something.
I was thinking about that maybe when he wakes up, we can come in and show him off. He's a lot bigger now than he is in these photos. All right, let's jump into short-term rentals. Short-term rentals was a line of business that we launched in late 2023. So we had this line of business all through 2024. It really started as an experiment, as a way to say, what's another way that we can create another stream of potential leads, another way to fill our units to generate revenue. And we decided that we would scale it. We have found that scale actually makes things easier in a lot of ways. So that's exactly what we did with our short-term rentals. These were all units that were already inside of buildings that we already owned that were vacant. We were operating them as long-term rentals, and when a lease turned over, we just would ask ourselves, hey, do we want to furnish that one and convert it to a short-term rental? So we had 3 units online in January of 2024. We got up to 47 units in July. I think we're actually now at either 50 or 51. So we have a few more units than that. And then all through that, just really proud of our team. It was led by Becky. Brianna has contributed a lot. Stephanie has contributed a lot. A whole team of facilities folks, more than we could name here. Despite that really rapid growth, we qualified for Superhost status the first time we were eligible, and we maintained it every quarter. So it was a ton of fun when our team would get that email, and we have a big company-wide chat, and they'd put the screenshot of that email in there. So really, just breakneck scale, and we were able to maintain our quality through it, as evidenced by our Superhost status. Something that we really focused on is, we were really using our short-term rental portfolio as a way to generate more leads, generate more revenue. And we came to see our relationship with Airbnb as a strategic risk to this line of business, kind of building our business inside of their business. Those of you that have short-term rentals, may understand that directly, kind of the capriciousness of Airbnb in terms of where they place you in the algorithm or how they handle customer service complaints or those sorts of things. So don't get me wrong, we love Airbnb. That's where a lot of our bookings come from. But we knew that if we really wanted to make this a sustainable, secure line of business, that we would have to really push direct bookings. A lot of people do continually come back to Rochester to get more and more medical care, to visit family over time. And so we launched blackswanstay.com. Sophie, who Nick mentioned earlier in our call, she joined our team as a result of Real Estate Real Life. She really took the lead on this when she first joined our team and improved that website with better photos and search functionality and information. And so as a result of that, we went from 82% of our bookings coming from Airbnb in Q2 down to 55% of our bookings. And so not only does that save us a ton on booking fees, it's also a better customer service experience for our repeat guests. And then it really minimizes that strategic risk of being beholden to Airbnb for the majority of our listings. So it was nice to see that we're close to that like 50% ratio, where 50% of our bookings are coming through our own marketing channels, and then 50% are coming through Airbnb.
Let's talk about where the rubber meets the road, and that's STR profitability. So from a high level, we furnished a bunch of units that were the vacant units, non-revenue producing units. This was kind of house money, as we like to say. This is free revenue that we're able to generate, and all the ancillary benefits that go with it, generating leads for our leasing team to convert. That's very, very valuable leads for us to generate. Along the way, we discovered long-term furnished units. Like we just rented one of our units for $2,600 per month all in, including some furnishings long-term. But we're not doing cleaning and supply replenishment and stuff. So an extraordinarily profitable lease on a unit that would otherwise be $1,800 a month or something like that for unfurnished. But the STR units themselves, like what units are profitable, what units are not profitable, what buildings are profitable, what seasons are profitable. This is something where we just kind of had some educated guesses before we got into it, and we kind of deployed units in different buildings, different unit types, and over time we started to notice patterns. So we deployed a ton of units at RDS, so we're delivering maximum revenue in time for our refinance there. As we've gotten into the slow season, we started to systematically defurnish the less profitable units. Those tend to be our main floor industrial flats. I think because they're a smaller footprint, smaller square footage, they tend to compete a little bit more with like a hospitality unit. I would contrast those with like our 2-bedroom, 1-bathroom units at RDS, where those units are just absolutely crushing it from a profitability perspective. So right now we're offering for lease basically any units that are not at least a couple $100 per month profitable versus a long-term net. And then we're taking those furnishings and deploying them to other units that we haven't leased. So again, we're just taking units that are otherwise non-revenue producing units and just kind of making the most we can with all the ingredients that are available to us. And you can see in that chart there at the bottom, as we've spun up more units, the red line that kind of plateaued here in the fall, while we started collecting data to figure out what was and was not working well. And then you can see our income started to decline as we started to get into the slow season here. And then we started to defurnish a bunch of those units. So in the future, that red line will go down more. And we expect to see our profitability go up significantly on the units that we are operating. Time will tell. And we know that this summer will be very profitable. We're trying to just set ourselves up for maximum success for this high season.
Mm-hmm. Next up is our updates on Residents at Discovery Square. So on our internal team meetings, we really pushed that Residents at Discovery Square was our key strategic focus for 2024. And we had good outcomes as a result of that focus. So since acquisition, so we acquired this in April of 2023, and then we had our big refinance event in October of 2024. When we acquired it, you may remember the entire first floor was empty. It was designed to be commercial space. It's the size of an entire city block. So just you'd walk in and kind of defies the imagination how much empty space there was. We built all of our what we call industrial flats units. So our residential units on that first floor. We completed our common area upgrades. We have a theater. We put in our parking lot that is beautiful. That takes away what was just kind of a yucky looking gravel lot with a lot of weeds in it. Now we have an actual asphalt parking lot. It's a huge value add and it looks really good, next to the building. And we did all of that on time and on budget. So we used a construction consultancy called Kraus Anderson. They really led the project alongside us. And because of that, choice to have the best of the best that's available, really in the state of Minnesota, we were able to complete all of that on time and on budget. And then that allowed us to have what Nick calls a revenue slingshot. So we grew our gross income and our net operating income by approximately 40% between March and July of 2024. That was as a result of bringing all of those new units online and then also pushing rent escalations and renewals during our busy leasing season, which happens through, say, March and June in Rochester each year. So really staggering NOI growth, which then led to really solid financials in times for our new financing. So when we acquired RDS, it was a really interesting deal. You can go back and listen to previous webinars to get all of the details. It was a $27 million purchase. We put $3 million of cash down, so a really small amount of cash into the project. We assumed the in-place financing at just 2.8%. So we knew we were really excited about that in-place financing to get that really low interest rate. But we also knew from the day we closed that we only had like 17 or 18 months on the clock to get through all of that new construction, all of the releasing of those units, finishing out those common area spaces, improving the management of the building. But we thought it was worth it to have, 18 months at 2.8%. And then there was a seller carry portion as well. And we were able to do that. We kept that in place financing all the way through the last day. Nick and I were like, we're not going to get rid of tens of millions of dollars of financing at 2.8% until the very last day. So that expired on October 30th. We closed our new debt on October 31st. And we were able to do that cash neutrally on a 3-year term with a 30-year amortization, a 6.24% rate, and only $66,000 in origination. So it was just, kind of
Insanely good term sheet.
All eyeballs in the company and all the different departments were on RDS through 2024. And we got our victory.
Yep.
And there's, a ton of security in that asset for Fund 1 and Fund 2. We now have 3-year fixed rate debt to get us through the next couple of years. And we created over $6 million of equity in that building that is, rather locked up right now because of interest rates. But when there's a dip in interest rates in the future, we'll be able to do a staggeringly large cash out refi and have a really large distribution of that equity out to our Fund 1 and Fund 2 investors.
We have $16 million of equity in that particular property, the current loan versus appraised amount. So I like seeing we have $16 million of equity in that one building on the appraisal from 2 months ago versus the current loan amount. So
I just want like a little audio clip of that, and I can just play that whenever I'm in a bad mood.
Probably the best deal we've ever done. That it may never get any better than that, but that was a pretty good deal. Yeah.
So here's our updates for Fund 2. Tanara Villa is one of the largest assets in Fund 2. This is one of our largest assets in our Tacoma market. If RDS was our big strategic focus for our Rochester portfolio in 2024, Tanara was our big strategic focus in Tacoma. So we poured all of our resources into Tacoma or into Tanara really throughout the year, but then really a huge push in the fall and the winter. 42 what we call heavy renovations are complete. A heavy renovation is something like where we're not just doing paint and light fixtures and flooring, but we're doing some sort of demolition, some sort of change to a wet room like a bathroom or a kitchen. 30 light renovations are complete. We have about 20 workers on site every day. We just had several people from our Rochester team out at Tacoma last week, taking a look at Tanara and all of our other assets there. And just when you're at a big renovation site, it kind of feels like a beehive. People are just sort of moving in all directions, and there's just sort of this hum and this buzz. Nick personally walked every single rehab when he was there in fall of 2024.
And
And
then we
then
walked every single rehab last week.
just last
And we
week.
had
Yeah.
our director of construction, our kind of site foreman, and our construction manager from Rochester go out and walk all the job sites there. We're just pouring as much time and attention as we can into that asset as possible. Huge efforts underway. They're now kind of wrapping up. I'd say they're mostly complete at this time. I was trying to get some updated photos in time for the slide deck here. I think they're in my chat right now, but the clubhouse has all the countertops and paint and flooring and stuff in there. We just need to get the furniture and like fitness center equipment installed. That's not there yet. Things are absolutely flying along. We've made just staggering progress on Sonora here in the last couple of quarters. Financially, again, just like look at the rent roll, look at vacancy. Like these numbers don't lie. Our January 2024 rent roll, so 12 months ago was 99,000. Our rent roll as of December 1st, I guess I probably should have pulled the January 1st rent roll, but 158,000. So we've had a 59% increase in the rent roll on this property in just a single year. Just an absolutely staggering improvement in the overall rent roll. And then the chart, you can see our average rental rate when we purchased it. It was at 1150 average rent, and we're at 1425 right now. So we've seen a correlating 40% increase in overall per unit rental rate there. Sonora just appraised as is for 30 million. We bought it for 23 million, spent about 4 million in construction costs. We've had some carrying costs in addition to that dilutes that a little bit, but we're doing really well. I was very pleased with how that appraisal came back. Like, and it's not done yet the way RDS is done, so could not be happier with how that appraisal turned out for Sonora Villa. This remains a huge focus for us as we get ready for getting our kind of final phase of construction financing. We had something lined up for September, and then interest rates went up like an entire point. And so that proposal did not look so good all of a sudden. We're shopping for a new proposal right now for our final phase of construction financing on Sonora Villa, and cannot wait to get that rock and rolling.
Mm-hmm. And then some of the nice things about our Tacoma portfolio is that while Tanara is taking a lot of resources and focus, most of our other assets in Tacoma are just kind of steady Eddie. We are working on renovations, but the scope of our organization is such that we do so many renovations and so much management change across the entire portfolio that when we have these smaller buildings where we're only doing, say, 6 renovations for a lot of,
for most people.
Yeah, for a lot of groups that would be a lot, and for us we're like, okay, that's just like a normal day of the week. So Kensington and Lauriston is owned by Fund 2. We have 5 active renovations at Kensington. We have 1 active renovation at Lauriston. These are not neighbors. There's one building in between them, but they kind of function as neighboring communities. And again, you can see the rent growth there. So this is a great time if you're listening live, or if you're listening to the recording and you're kind of listening in, say, podcast style. This is a great time to take a look at the screen in the last several slides that we went over, and then the several slides coming up. We have a graph for the rent growth from acquisition date to December 2024 for each of these assets, so that you can see directly the rent growth that's happening. So Kensington and Lauriston would have gone from about $975 per month in September of 2023 when we acquired it to $1,250 in December of 2024.
Garfield has been, I mean, probably our best deal in Tacoma so far, and that was not expected. It just, man, this thing that just came together like unexpectedly fast. At this time, the asset is fully stabilized. We're at least a year, probably a couple years ahead of schedule on this. We do have 2 vacant units today. I wanted to cherry pick my numbers so bad because the rent roll from the month before, it was 100% occupied, and our rent roll was all the way up to 45,000. It's only 41,000 here, so that would have given us 45, 47% rent growth year over year, but our total rent roll is up 40% year over year. And this asset is just doing absolutely fantastic. We filled all the commercial bays. At this point, there's just 1 empty bay that's like a not super desirable bay. I don't know how soon or ever if we're really going to fill that bay. So I consider this asset really full and stabilized and just doing absolutely phenomenally well right now. And all these renovations were financed out of cash flow. Mm-hmm. This has just been a steady cash flowing asset from day one, and it's going to continue to get cash flow here in the foreseeable future. Could not be more happy with just the change we've made at Garfield.
And then pivoting back to our Rochester portfolio that's in Fund 2, Dakota Townhomes. When we acquired it, it was named Georgetown. It was named Douglas Trail, and we rebranded it to Dakota. This is a 100-unit townhome community, Section 42, income restricted community. It was our first income restricted community, and we did really well with this, doing renovations. Probably the largest lift in terms of management transition that we've ever had. I was personally involved day to day in the management transition of this project for probably about 9 to 12 months after we first acquired it.
Mhm.
And it was really successful, and it really laid the roadmap for Georgetown townhomes. We have an income restricted community in Tacoma. We're going to operate Boulder Ridge very similarly. And we were able to do a full cash out refi in December, 2.4 million in proceeds. So very excited about that. Our January 2024 rent roll was 108,000. Our December rent roll was 127,000. And that really doesn't even tell the story going back to our acquisition, which was in December of 2022. The rent growth that came from then, it's been about a 35% revenue growth since 2022. Just really proud of what we were able to accomplish here, changing a community that really had a lot of poor culture, like just a lot of like trash in the streets and people leaving couches and beds in the streets, and 50% rent delinquency on the day of acquisition. And just, really bringing it up to the type of community that you or I or anyone listening, would be happy to live in one of these townhomes, would feel safe and comfortable and clean and enjoy the neighborhood. And being financially rewarded for that, and just so excited about Dakota,
This
and,
past
and
week,
excited that I'm not involved day to day in the management transition anymore, because it was draining. I mean, there was a lot of times where I was like, I'm really glad that I'm a psychiatrist and I'm able to like understand the systemic cultural problems that are happening, at this community, and really right that ship.
this past weekend was a huge day of success. So we just happened to drive this asset, usually like before or after church, because next to our church, and there's often trash that's kind of been dumped in a certain location. There's just this culture of dumping trash there, and we've tweaked our trash options that we offer our tenants countless times. We've had this asset now for going on 2 years. And finally, this was the first weekend where we saw zero dumped trash whatsoever.
Mm-hmm.
Like it's taken a couple of years, but we finally gotten there in terms of trying to improve culture. Once you get this like bad habit in any community, in any society, like that habit tends to just like reproduce itself. And so changing that behavior is really difficult. And we had this huge success where we finally had 100% of waste in the community in the dumpsters provided.
Yep. And I think one of the things I want to reflect on here is like sometimes people will reflect to us like, Nick and Elaine, it seems crazy that you guys are like working on dumpsters or driving through your communities or those sorts of things. And we think this is where the real value comes from.
Mm-hmm.
We think that number one, there's no third party property management company that we can blame. Like, oh, our financials aren't good, we're going to change property management companies. Like, well, we are the property management company. So if things aren't going well, like there's no finger to point, right? And then we think that operations are everything. And that this is where the value comes from. And this is, our obligation to our portfolio, to our investors, to be managing and stewarding our assets and leading our team and thinking through all of these things that they have these downstream effects, right? Like it's not comfortable to live there because there's trash in the street. So then you don't have a high renewal rate in terms of both the renewal rate and the escalation that you're able to bring to bear during that renewal. As you're doing a lease showing, I mean, the unit could be the Taj Mahal, but if there's trash in the street when someone's driving up to the unit, they're not going to rent there. So you're wasting your leasing agent's time and the marketing spend and all of that, like making sure that all of the pieces in the value chain are accounted for to drive these outcomes. So just wanted to comment on that. We love actively managing our portfolio.
Here's the river view, and that's just the example that not every single chart is up and to the right. This asset struggled more than any other asset in the portfolio this summer with leasing. One point we had 30% vacancy on this asset. To this day, we're not entirely sure why. We've made a million tweaks and improvements to the asset, and we have zero vacant units today, but we certainly were not getting top of the market rents, and you can see our rents actually deteriorated from a peak in June. This chart has our average per unit rental rate. And you can see our rents deteriorated. We also put all of our most premium units into service as short-term rentals. That also kind of handicaps our rental rate. So our one bedrooms and kind of our less desirable units are long-term rentals that show up on this chart. And our most desirable, like 2-bed, 2-bath units, are not showing up on this chart because they're short-term rentals. So we did discover that our SDRs are very successful here. In fact, they're the most profitable SDRs in the whole portfolio. So we're going to continue to roll out more of those. And we did just get a long-term lease, our most profitable long-term lease ever yesterday on one of our 2-bed, 2-bath units here. So it's having success today, but man, this was a tough year for it. So this is maybe the exception that proves the rule or something like that. But this is a chart that, we always want to be transparent with people. Like the Riverview struggled this year, just struggled to lease.
Meredith asked a great question related to the short-term rental portfolio. how can you tell which individual units are profitable? How do you break out your cost per unit? So on the accounting side, we have the revenue that we bring in for each of those units, whether that's through Airbnb or VRBO or our direct booking site. We know, who stayed in that unit that night, how much did they pay, what were the cleaning fees, all of that. And then we have all of the expenses, whether that's our cleaning fee, if we have to dispatch a maintenance person to fix something there, if we need to, put expendables like toilet paper and paper towels and those sorts of things. If we need to replace a piece of furniture, we have all of that. So it's just all of our income minus all of our expenses. And that tells us our per unit profitability so that we can test, just as Nick said, is there a certain type of unit that's more profitable? Is there a certain building that's more profitable? So just having really good accounting behind the scenes for all of our income and all of our expenses. Mm-hmm. Riverview, we have a few more unit purchases to do there. We acquired 6 units in 2024. We have 3 more nearly under contract. Like maybe we'll have that signed PA in our inbox today, next week, 2 weeks from now. But making steady progress with that seller. One seller owns 3 units. And then after that, we only have 3 remaining units. And then at that point, we will own the entire building. Instead of it being operated as a condominiumized HOA, it will function as a normal apartment building, the way you think of an apartment building. That will make the operations much more efficient. It will drive up the value of the building because then it can be transacted as an apartment building. So we've just been kind of chipping away at this one ever since we acquired our first bulk unit purchase. When we first, I think we bought 39 of 63 or something. Don't quote me on that exact number. But
you got it.
We've been chipping away. So we purchased those with cash, and then we do some light renovations, and then we put tranches of financing on them. This is part of the reason we're holding back so much liquidity in Fund 2 so that we can acquire all of these units. So we have one more tranche of financing left, and then we'll be done. So we're excited about that. There's humans on the other side of these transactions. So who knows how long it might take to get these final 6 under contract and to close, but we're hopeful that we might be able to accomplish that by the end of 2025. We've had good conversations with all of those sellers. It's just really helping them to think about, these are all investment units for them. So helping them to think about their tax situation and are they going to 1031 and what else are they going to buy, and kind of guiding them through that process.
Mm-hmm. Next is the Colby. So this is getting to be one that's almost mature enough. We might kind of drop from the presentation like we didn't talk about Nicholas Oliver. That's a steady Eddie asset that's just been delivering, not a lot of news. We're up to about 2/3 of all units that are renovated at Colby. You can see our rent growth charts just absolutely staggering from $725 a month to $1,000 a month, and we now have many leases that are over $1,000 a month. We've been able to create so much value with this asset. It seems like that growth is going to continue. If we wanted to, we could probably do an additional cash out refi on this asset here in the near future if we don't redevelop that site.
Yep, Nick's having lots of conversations with the city, with developers, with builders, architects, all of the things. As you can imagine, building a multi-hundred unit community is a years-long project, and so we're just slowly chipping away at that. Mm-hmm. Let's talk about our updates for Fund 3. So Fund 3 launched and filled in 2024. So just like Fund 4, it is our newest fund. It was a $15 million fund. It's a little under a year old today. I'd say it's maybe 10 months old. It has assets in both Rochester and Tacoma, just like our overall portfolio. And it owns Uptown Apartments, Viking House, a couple of single family homes, Bayswater and Baycrest, Georgetown, half of Georgetown. Georgetown is also owned by Fund 4, and then half of Boulder Ridge, which is under contract and will be closing the moment we get our approval email from HUD, which again could be maybe it's in our inbox right now, maybe it comes next week, but any day now we'll be closing on Boulder Ridge.
So Bayswater is an income restricted community that we bought in Fund 3 less than a year ago. And we just had some great questions here from Greg about affordability. And there's typically a 30-year income restriction that goes into place when one of these properties is built. And we tend to buy these properties when they get to the end of that restriction. As you can imagine, the value of that property goes up quite a bit when that income restriction expires. It's a process. It's not easy to go through all that, but we're willing to do the hard work. And so Bayswater just has less than a year left on its income restriction, December 2025. So this is an asset we're kind of going slowly and carefully, really focusing our efforts elsewhere. As you can imagine, it doesn't make sense for us to do knockout rehabs on this property before that income restriction expires. So we're doing like some light rehabs, some turns, We've leased several units. It had kind of a slow start. We inherited like some abandoned units, which are somewhat of a legal nightmare, particularly on an income restricted community. No one was asked to leave the property as a result of that transition. We're unbelievably proud of that, especially on an income restricted community. So this has been kind of a steady Eddie property that we really just need to kind of stay at the helm and make sure that everything stays on track for the next year, and then we're going to be rewarded handsomely for it at that juncture.
And then Bay Crest, which as Nick said, is completely unrelated to Bayswater.
No
They're
relation.
no relation, different parts of Tacoma. Just happened to have, nearly the same names that we happened to acquire at nearly the same time. Smooth, quiet, easy. 100% of residents are paying on time. We've done 2 heavy renovations there, 2 light renovations. We've had a nice increase from our acquisition date. Our rental rate at that point
Yeah.
was around $12.50, and now it's at $13.75. That comes from management improvements. We have probably 20% of our portfolio, like Nicholas, New 52, some others that don't really need a lot of renovation. They really just need a close eye in terms of management and pushing things in terms of marketing and the resident experience to get that boost in value. And that's certainly the story of Baycrest. And it's really beautiful too. It has those beautiful balconies, looks out at the Puget Sound. It's just a lovely community. It's probably where I would want to live if we lived in Tacoma.
Oh, it's our best located asset for sure. One thing that's important to note, so City of Tacoma proper technically has rent control. There's a 5% restriction on rent increases, and you have to give a 180-day notice, a 6-month notice on rent increase. And despite that, we've had rent growth from $12.50 to $13.75 in less than a year. How's that possible? Obviously, we have organic turnover. We have people that are vacant. So again, if we literally gave notice to people of rent increase the day we purchased the building, it would still be not possible to achieve these results. We make sure that we're staying in full compliance with the law, and we never stop creating value. A lot of landlords, when they hear rent control, they think, oh my God, the sky is falling, sell the portfolio. We see an opportunity to serve. How can we align our policies and procedures with what the community is trying to achieve? And we never stop creating value. So we went to these tenants and said, hey, what do you want? How can we create more value? And we've done incremental rent escalations. We've turned over units. We've moved people from these units to other properties in our Tacoma portfolio to fully renovated units at Kensington and Lorison down the street. And then that's allowed us to move in new tenants at higher rental rates into light or heavy renovated units in this property. So when you hear rent control, like it's a regulatory burden. We're obviously not proponents of rent control. I think it's an inefficiency that harms everybody, but it's not impossible to create value, and it's not impossible to drive economic gain in a rent control environment. And just like this is insanely good outcomes in that context.
Next up is Uptown Apartments. That's here in Rochester. And this was another where this was a relatively new building, very smooth transition. We didn't have to do major renovations. This was really just a management improvement play. Our average per month rental rate is now $17.30, which is up 7% since we closed on this in April. So about 8 months or so, we've achieved a 7%. We closed on this the day before my birthday, and then Nick hosted a little birthday party just for he and I. We just had some food in the clubhouse. It was really, I don't know, quite sweet and just kind of funny. I was all dressed up. We were driving, and the building was straight ahead of us to the left in the car, and I'm like, isn't that beautiful? And we own it today. And Nick was like, that's where we're having your birthday dinner.
I'm like, let's go check it out. It'd be fun just to do a walkthrough, and then we walked into the clubhouse, and then we had everything decorated.
Yeah,
surprise party.
It was pretty fun.
Yeah.
Uptown's been a good one. It has this beautiful rooftop terrace. It's a really nice asset. We've had our eyes on it for a while and excited to acquire it. Next up is Georgetown and Boulder Ridge. Very similar communities in terms of their size. They're both townhome communities, both in the low $20 million acquisition. They're both half owned by Fund 3 and Fund 4. Georgetown is closed. Boulder Ridge will be closing any day or any week now.
So Georgetown is off to, I'd say, just about the strongest start of any property we've ever bought, especially for the size of this thing. It's 132 townhomes. It's 16 acres. This is a big ship to turn, and it is turning swiftly. Right now, we only have one vacant unit. Besides the fact that we had a huge amount of vacancy that we inherited as part of the closing and transition process, and then our new leases are right on track with pro forma, despite the fact that we're in the off season, kind of starting from sort of a disadvantageous place in terms of vacancy. We had our full energy audit and remediation program implemented within 1 month of closing. So we replaced every shower head, every faucet aerator, every light bulb in all 132 townhomes within 30 days of closing. So I hope you hear things about that and think, I hope you get some semblance of the level of intensity that we pour into these assets. I was kind of like stopping by the office every day after work. Like I'd pick up the kids and then like take the kids by, like, hey, how's the day today? What are we doing to move the ball forward? We're on track to cut lawn and snow costs in half, which is a really big deal. It's $50,000. That was the seller's financials for lawn and snow cost. We're on track to maybe hit 25K. We are already working on reducing our property taxes with the 4D tax exemption program. Our model unit, there was a model unit that had been a model unit, this thing for almost 30 years, and we had it converted to a leasable unit and leased and delivering revenue within 30 days of closing. We've already renovated an additional 20 units, so we have more than half, well over half, probably about 80 out of the 132 units renovated now. We have new gas meters getting installed, and any units where we can start billing back for gas, we've already started doing that as part of our renewals. And then we're optimizing our affordable kind of market rate unit mix, which is a big kind of process of economic Tetris. Like, what's the most favorable tenant and unit kind of matchmaker game that we can play to get the best possible outcome for everybody. So just an insane amount of effort that's been poured into this asset by Hunter, our director of transitions and acquisitions, Laura, who manages all of our LIHTC stuff. She's our compliance officer. Huge amount of compliance work that goes into these deals. Dustin, who is our kind of site manager, that's been kind of quarterbacking this thing. Just unbelievable. This thing was cash flow positive in its first month of ownership. That is like really rare. That is really, really rare. So this thing it's off to a phenomenal start.
And while Tyler wasn't doing his 6,000 maintenance tickets and getting his general contractor's license, he was doing a 1 month energy efficiency program at Georgetown. So
That's right.
just huge appreciation for Tyler and
What's
everything
that?
that he's
That's got to be like 1,000 light bulbs to change or something. It's a lot. It's a lot of light
something like
bulbs.
that.
Yeah.
Boulder Ridge, we're so excited about this community. We love showing off these pictures. We've shared with you, Boulder Ridge was built in the early 2000s by a luxury home builder. So you just kind of built a little bit differently than your typical apartment community, just a gorgeous community. And we cannot wait to get our hands on it in terms of owning it. All of our documentation has been submitted to HUD. We're waiting on our final approval any day now. We're anticipating a closing date, literally any day now.
January 22nd or 23rd or February 6th is what we're currently targeting, but we're at the mercy of HUD.
Yep.
So
Yep. We are frequently visiting the site because we've been under contract now for 8 or 9 months. So, a relatively long contract period. Nick was there just a week ago. Dusty visits the site quite a bit. Dusty is our on-site manager who's on the site daily. So we've just worked out an arrangement with the existing property management group. You may remember that the story of this acquisition is this group grew from about 0 to 10,000 units over a period of like 3 years. So to put that into perspective, we grew about 1,000 units over the last 3 years. Well, they realized that their growth, was too much. It was leading to a lot of quality detriment, and they were really struggling to manage their assets. So they were excited to have us there daily, keeping an eye on the asset. And it's just a win-win deal. We did that with Georgetown as well. Just to, we're always doing things differently like that. It's not normal that you manage things before you own them. But we, when you have a lame duck, whether it's in political office or as a property manager, right, there's a certain culture that comes from that can be really bad for the transition of that asset, for that community, the people living there. And so we're happy to jump in and start getting things all buttoned up so that the day we close, we are just off to the races. We have our vendors picked out for our renovations, our equipment for lawn and snow. And then just because we've been, slowly managing this asset while we've been under our contract period, we think the deal has gotten better and we're excited to close any day now. Mm-hmm. So next up is Fund 4. As a reminder, Georgetown and Boulder Ridge are half owned by Fund 4. So you've already heard some of our Fund 4 updates. Fund 4 also launched in 2024 and then just closed at the end of December. So it's our newest and youngest fund. And it owns Stonehaven Apartments, which we talked about right at the top of our presentation here. Here's our rendering of this. This is an extension of our Stonehaven townhomes community, really identifying that people wanted smaller units at a more affordable price point, smaller bedroom count, smaller footprint. And so we built this to complement our Stonehaven townhome community that we've been working on over the last 5 years.
So we put it in bold and red that construction is going extraordinarily well. If you check out my Facebook feed, you can see some fun photos and videos from Elaine and I walking the job site here this past weekend. We're a little ahead of schedule. We're a little under budget. That is a miraculous achievement in today's kind of environment. We had originally allocated a $500,000 budget for contingencies. So budget overruns, and then whatever we don't consume at the end is an interest reserve that pays our interest payments when the asset's online. So we have spent $0 of that, and in fact we're ahead of budget slightly. I mean, being ahead of schedule, under budget in today's environment, that's as good as it could possibly be. We're on track to be open for kind of May June timeframe this coming year. I keep saying May June. Team keeps saying June July, but I think we'll be able to hit a June 15 move-in date.
Nick
And
is Nick
we're
is the master of just like putting things on our spreadsheets and just saying that they're going to happen, and then they do.
they, I'm not
and, and
Elon. I'm
and
not like January,
and
but
and that works for everybody, right? Like that is not here's my little like Elaine the coach thing for you to add some value. Like that is available to all of us as humans. When we cast a vision, when we say that this is going to happen, sometimes the universe kind of pulls some strings for us, but it really just it attunes your nervous system toward asking yourself, well, what appointment do I have to make, or who do I need to call, or what ball do I need to move forward, or what other thing do I need to get rid of in my life so that I can have more focus and attention on this. So when you want something and you want it with all your heart, cast that vision to the world. Start putting it in your planner, putting it in your conversations with people, and you will find that it comes true.
100%.
Yeah.
So we got a couple more fun photos there. We're putting up our rental listings right now with like the architectural renderings and kind of in progress photos. We're starting to do tours. We got some fun branded hard hats and high visibility vests so that our tenant prospects can like walk the job site and like see their unit while it's just being sheetrocked. We've got sheetrock up in some of the units already. So I just could not be more excited about how this project is progressing.
So that is all of our updates for Q4 slash our 2024 year end. We said in Q3 of 2024 that Q3 had been our strongest quarter ever, and then Q4 was even stronger than Q3. And as we look ahead to Q1 of 2025 and all of 2025, that's the energy and the momentum that we want to sustain as our portfolio matures, as our property management company matures, as we enjoy the fixed rate debt, right? We shared at the beginning, we only have $1 million of debt that's renewing in 2025. So while a lot of the industry is going to be focusing on surviving and not getting killed by their debt, we don't have to worry about that. And we get to put all of our focus on acquisitions, renovations, stabilizing the portfolio. Q4 was good, and 2025, our projections are that it's also going to be really good.
Mm-hmm.
So just the things that we accomplished in Q4. So this isn't even the whole year. This is the Q4 summary. We completed our RDS appraisal and the new financing in place on October 30th. We generated about $6 million of equity in the 18 months that we own that. We completed our Tanara appraisal, so we have about $3 million in paper equity as a result of that appraisal. We completed our cash out refinance on Dakota Townhomes at $2.4 million. We closed on Georgetown Townhomes. We've had really staggering rent growth portfolio wide. You were able to see the charts for all of the assets throughout the entire presentation. And our portfolio wide vacancy is right at or right under 2%. No capital calls, on-time distributions, monthly distributions going out for Fund 1 and Fund 2 January onward for 2025. Fund 3 and Fund 4 are brand new baby funds, but we anticipate starting distributions in Q1 2026. It was a good quarter.
Mm-hmm.
While we had a baby.
Yeah. Oh, yeah.
While we, took some time off for Christmas and
yep.
Took our kids to San Diego, and it's been good.
Yeah.
We hope that it's been good for you as well. We hope you enjoyed this presentation. I believe we answered all of the questions that were shared with us there in chat. Hopefully you got a lot of value. The replay will go out in the next day. There's also a brochure version if you want to see it and kind of get through it more quickly than listening to the whole video. But we know a lot of people like to hear all the details about all of the assets. As we mentioned at the top of our time together, on January 23rd, we have our commercial lending boot camp. So you may be asking yourself, like, how have they gotten all of this debt over the last several years, and how are they negotiating with banks, and what type of lending parameters are they looking for? And we're going to share all of that, whether it's a single family home that you're looking to acquire or a large apartment building, you're looking for cash out refi, whatever it is. It's always been the deal and the debt make the magic together. More of the focus needs to be on the debt right now because debt is hard right now. So excited to do our commercial lending boot camp. That'll be a live call on Thursday, January 23rd at 7 p.m. Central. We'll have a live teaching, we'll have a Q&A time, we'll have a workbook that goes out, the replay will go out. So share that widely with anyone you know who may be interested in that. You can sign up at blackswanteam.com/lending.
And you're invited to Real Estate Real Life. If you have questions, we're always happy to chat with you about those. What you could expect or what you might be surprised by at Real Estate Real Life this September 15th. I'm sorry, 11 to 14 is the main event, and then September 15th is the optional VIP day. You can use promo code 2024 to save $500 on your registration right now. And I hope that you all take advantage of that offer.
Yeah.
This is not a profit-making endeavor for us. We provide like a staggering amount of value at this event. We hope it's like no other event you've ever been to before. And with that $500 off coupon good for the next 48 hours, this will be the conference deal of a lifetime for you.
Yeah,
So come join us at
absolutely.
Real Estate Real Life.
Yeah, either in person or there is a virtual option that's already an affordable virtual option. And then if you put on that $500 coupon, you can save a ton on that virtual option. So we'd love to see you in Rochester in September or joining us virtually. RERL2025.com. And this $500 coupon with the promo code 2024 is the largest promo that we'll have as a result of our launch of Real Estate Real Life. So if you're interested in it, we recommend you take advantage of that in the next 48 hours.
Christina's going to be there.
Christina's going to be there. Yeah,
Can't wait to see you, Christina.
Very excited. That is a wrap for our Q4/year end 2024 performance update. Again, thank you all for your time today, for being part of the Black Swan family, for being an investor in one of these funds, for considering investing in the future. Our Secure Freedom Fund, we will have that official launch a little later this year. So you can add your name to the waitlist at securefreedomfund.com. You can check out the materials and everything there. And then when we launch that, it'll go first to the waitlist and then publicly to our whole list. It is a joy and a pleasure to serve you. I'm sure Rachel will put in the email if you need to block a time on Nick or I's calendar, if you have any questions, those sorts of things. We're always here to serve you. Rachel's here to serve you. I think that is a wrap.
I think that's a wrap.
All right. Thank you, everyone.
Thanks, everyone.
Have a great week. Happy New Year.
Happy New Year.